Welcome back. You're watching the IIFL CNBC-TV18 Investor Camp coming out from Bhubaneswar. All the chatter these last few months has been about politics. The BJP, the Congress, now the emergence of the AAP. What could that mean for the market and its fortunes over the course of the next few months? Here's Amar Ambani talking about that and this equation between equities and politics.
Elections, we believe, is a next big trigger which will decide whether the market moves into the next orbit or whether we are going to be in this uncertain zone for the next 1 or 2 years more. It's not that the political situation or if there's a new government, it changes everything. It's not that the market will double from here in a few months' time or so after elections. But I think two things will happen. If you do have a stable government at the center, then one is it will boost the stock market in terms of sentiment, and you can see the market, the trading level will possibly rise. So you might have a 5 or 10% upside move, and then you can have a new trading level, and from there the market will start tracking the other factors which it usually does, be it economy or valuations or liquidity. And the other thing, more importantly, is that it will trigger the reform process which has been halted or which has been stuck for so long because of corruption allegations. Now that the party is preparing for elections, so it's caught up and can't make too many decisions at this point. So all of this will possibly get a boost, and that from a long-term perspective is something which is a lot more important for the market. Obviously, currently the market thinks that a BJP government is more pro-market or is more pro-economy. In my view, if any of the two national parties were to come to power, if it is BJP, then obviously that's what the market likes and wants, prefers. If it is Congress-led government, then there too I think the critics will be silenced, and if there is a stable government, then action will start. The only scenario, and when I said that this election will decide whether we move into a new zone or whether this uncertainty continues for a year or two more. So the only scenario where if there's a hung parliament or a third front comes to power is a bit of a worry point. So I think this is a very important factor, and this will decide. It is not going to be possible for BJP, even with Narendra Modi, to immediately reach a situation where they start competing from every seat. Narendra Modi is obviously going to every place campaigning. Even to Tamil Nadu he goes, and there is a lecture and crowds turn up in huge lots. But they don't have an identity locally there, and it's going to be very difficult for them to compete on an all-India basis. So what the BJP really has to maximize is from 300 seats and not from 543 seats. In the past, growth conditions seem to have shaped to some extent or to a large extent the election outcomes. In 1989, the incumbent Congress lost, and the real GDP, the average real GDP in the last 5 years at that point was around 5% or so. In 1996, again the Congress lost. It was ruling before that, it was governing before that, and there too the average of the last 5 years was around 5% or so. In 2004, everybody expected that the NDA will continue to be in power. But to everybody's surprise, the NDA lost, and there too the growth was around 5.5% or so. And in 2009, the Congress continued in power. There people thought that they will lose in terms of seats or they will lose power. They not just retained power, they won more seats than they had won the last time. And that was because the average GDP growth at that point was 8.4%. In 2014, the average is much lower again compared to the 8-9% that people like to hear or see. And if you look at more recent growth, which is more like 4.4, 4.85%, it's even worse than the average of the last 5 years. And poor growth, high inflation, persistent inflation, and these corruption scandals which have taken place in the last year or two, the combination of these three is potent anti-incumbency. And this is what is working in favor of Narendra Modi and BJP.
2013 was an interesting year. A lot of the competitors for equities like gold actually underperformed, but there's still viable options like fixed income. Here's Sanjay Sinha talking about all the various asset classes, the options available, and why it should be or could be a good time to start dipping your feet into the equity market.
I believe that whatever happens, we are not worried about who is forming the government. What we are worried about is what is going to happen to the markets, isn't it? So for us, there are only two scenarios. One scenario is that in case the elections surprise us, the markets will fall very sharply. But as has been the behavior of the market in the past, it will fall very sharply and it will also jump up very sharply. We have seen that happen in 2004, isn't it? Now, if that happens, it has also actually happened in 2009, if you recall. So if that happens, what should you do? In my opinion, you should keep on systematically investing in your asset classes where your asset allocation is in order. Are we today earning all our income in 1 month or 2 months? No, our income is coming to us for every month, and normally our time horizon of investment will be 10 years. So 10 years is equal to 120 months. Whatever is going to happen to the market is going to happen in how many months? 4 months. So if we have 120 months to invest in, should we be so worried about the next 4 months? It is not even 5% of your time of investment. So I don't think you should worry too much about what is going to happen in the market in the short term. I think what you should be focused on, that in this market, in these two scenarios, what would be the sensible way of investing? See, today we look at equity from a very short term perspective. You've heard Udayan speak, you've heard Vikram speak. They've all placed before you that your investment should be for a slightly longer perspective. Not only should it be for a slightly longer perspective, it should also be focused on quality. So I think if you have got those basics right, in the event that the market falls very sharply, if you are continuing your current allocation and the market jumps up, you would have also benefited by buying some equities when the market had fallen. So keep to your systematic allocation. Don't change it just because you have an event coming before you. However, if there is another scenario that may play out, which is that the markets will fall and remain down for many, many months, that I think we have to decide whether that is a likely scenario. If you believe that that is likely to happen, then I think what you will be getting in, say, the next 1 month as being able to buy equities for just 1 month at discounted price. In the second scenario, you will get an opportunity to buy equities at discounted price for many months. But even in that scenario, I don't think there is need for you to change your asset allocation.
Okay, it's time for another break. When we come back, it's the questions from the Bhubaneswar investors about the equities, the mid caps of course, and where things could go in this colourful year 2014.